There have arguably never been so many possibilities and incentives to begin investing in the stock market. Deposits in banks are now yielding a huge zero, and success stories are flooding social media, inviting people to invest in stocks. Tesla shares have surged almost tenfold in price from the beginning of 2020, from $85 per share to $932 now. You wouldn't be the only one wondering whether or not to invest in Tesla after hearing this. If you hope to retire early, you might be asking yourself, just how much Tesla stock do I need to buy to retire? In today's video, we will break down the numbers for you, so keep watching to find out everything. Last year, the global and local stock markets saw a large growth in transaction volume, which can be attributed to the entry of tens of millions of micro and modest private investors into the market. This flood was primarily in equities, where an increasing number of platforms are offering one-click trading, $1 trading, zero commission trading, and so on. Popular social media platforms Twitter, Facebook, and TikTok are awash in reports of dizzying riches from gambling on certain stocks. Luring newcomers in, there's a sense that all you have to do now is get started and watch all the money roll in. First of all, when investing, there are a number of things to keep in mind. The stock market is incredibly volatile, and not having enough knowledge before diving in can spell doom for you. The first thing to keep in mind is to invest only what you can lose. I only propose investing your disposable income, which is money you don't need to spend and can theoretically afford to lose without significantly altering your existing lifestyle. This should not be your first dollar you have in your pocket or the first paycheck that gets into your savings account. To begin, lay aside 3 to 6 months worth of expenses as a safety net. Anything else is a waste of money, and not only can you invest it, but I strongly advise you to do so. You see, money can't be left idle in order to maintain its value. Also, if you aren't already investing in stocks, I'm sure by the end of this video you might want to reconsider that. As the saying goes, the best time to plant a tree was 20 years ago. Today is the second best time. You can always find a reason to put off investing. Perhaps markets have been rising for too long, or perhaps you're fearful of an economic downturn, like the market's falling, and so on. However, investment is a long-term endeavor. Time in the market is more crucial than market timing. Now that that's out of the way, let's get into buying stocks. It is essential to find a retirement account that will allow you to invest in stocks. Most 401ks don't allow you to invest in individual stocks, so if you want to put your retirement money into Tesla, you'll need to open a separate account. For most people, an IRA is the most straightforward alternative. Any broker can start one for you, and you can invest in almost anything. You can also choose whether to pay taxes now in order to benefit from tax-free withdrawals in retirement, or to gain a tax break now and pay taxes afterwards. Self-directed brokerage windows are available in several 401k plans. If yours does, you may be able to invest directly in Tesla through your 401k. Tesla's stock has increased by more than 50% since the latter part of 2021, bringing the company's market capitalization to more than $1.2 trillion. It only passed Toyota, which is now the second largest automaker by market capitalization in 2020, but is now worth nearly $900 billion more. You would have nearly tripled your money if you had invested in Tesla in 2020, when the stock was valued at just over $400 a share. On November 2nd, 2020, a $1,000 investment would be worth about $2,940 now, indicating a 193% return. Returns are significantly higher if you go back just a few years. Tesla was selling at roughly $38 per share 6 years ago on November 2nd, 2016. A $1,000 investment would have risen 3,025% since then, and would now be valued at roughly $31,286. The S&P 500 index would have returned 142.4% during the same time span. You would have made a 5-figure profit if you had invested in Tesla in 2011. Tesla went from selling only the Roadster to offering the Model S, 3, X, and Y during the course of those 10 years. The Cybertruck and Tesla Semi have both been unveiled, but no launch dates have been set for either vehicle. If you believe in financial independence, retire early, or FIRE movement, then you will see that Tesla is a potential goldmine for investors. With the stock's price rising from $5.74 to $1,229 over the last 10 years, a $1,000 investment in Tesla in November 2011 would now be worth just over $204,000. That's a return of more than 20,000%. An equivalent investment of the S&P 500 would have yielded a return of 357.4%. However, this does not imply that the S&P is a poor investment. In fact, most experts, including famed investor Warren Buffett, believe it's the ideal place for most people to invest because it holds every stock in the index, ensuring that it automatically is diversified. For now though, our focus is on Tesla stock and how to use it to achieve our comfortable retirement. If you want to invest in Tesla stock, you should be comfortable with roller coasters. That's because the stock's performance is characterized by dramatic up and down share price swings. And not just because the corporation issued a 5-for-1 stock split on August 31st, 2020, lowering the price of one share to the low $400 from a stunning $2,213.40 per share before the split. The stock is currently trading at over $900. To understand how this works, read more about stock splits. Another stock split is rumored to happen this year, which means the price of these stocks will go lower again, making it easier for you to invest in it. We made a video on that, so be sure to check it out if you want more information. Tesla's long-term growth will come from more than just selling electric vehicles. The corporation has established itself as a disruptor, and it may be able to maintain that image in the coming years. Tesla has a number of other possible growth opportunities. First, the company is focusing on expanding its autopilot and full self-driving FSD technologies. Tesla held an AI Day event in August to attract the top AI talent. Specifically, Tesla's ability to lead on the full self-driving front depends on its ability to attract the top talent. Several manufacturers and technology firms are attempting to make self-driving cars a reality, and the majority of them have the financial means to do it. Technological know-how could well separate the winner here. So how do you retire using Tesla stocks? You keep your capital invested, withdraw what you need by selling some shares, and let your remaining capital grow. This is known as a FIRE movement, as we talked about earlier. Let's say you have $200,000 and your investment grows at 10% a year. If you leave it alone, in 10 years you have $500,000. However, if you start withdrawing $40,000 to spend every year, in 7 years you'll have nothing left. Capital required to retire is $240,000. Tesla on average will return 20% annually. I think 20% is extremely fair considering Tesla is a business that fundamentally grows more than 50% a year. These aren't just random numbers. With $240,000 invested in Tesla stock, you withdraw $4,000 a month every month for the next 30 years. At the end of 30 years, you'll still have $240,000. Why didn't your capital go down? Remember, you withdraw what you need and invest the rest. So now, if $240,000 capital is needed and you divide by how much I'm sure Tesla stock will be worth by 2030 at $8,636, you will need 27.7 shares. If you translate 27.7 shares to today's stock price of around $900, it's only $25,000 in today's money. The next concern is inflation. While it is a valid concern, if inflation kicks in more, stocks will go up way more than inflation. So what's the problem? The only concern about inflation should be lifestyle inflation. I have no idea what other excuses or reasons people can come up with for not investing in Tesla. All in all, there's a lot to look forward to from Tesla in the coming decade and beyond. As the company progresses on these fronts, its stock could rise further from here on. Do you think you need to buy Tesla stock as a retirement plan? Comment down below.